Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's return back to discussion of the situation on euro currency. Well, based on the price action that we see mostly in intraday charts, it's very difficult right now. Makes the suggestion that it looks like bullish action. So actually, market has passed through the level that we have chosen as some kind of the signal line, level that market should not to break down to keep the chance on upward action. Also, guys, if you'll take a look on other currencies across the board, especially on New Zealand dollar, on Australian dollar, you could see that these currencies show really significant plunge, and Great British pound as well. Some currencies have their own reasons for that, additional reasons, but in general, overall sentiment on the market right now stands mostly in favor of the United States dollar. That's why, based on the action that we see right now on the euro currency, it seems that maybe right now it's not a good idea for taking a long position. So on the daily chart, as you can see, trend has shifted bullish, but price action definitely is not bullish. Market has failed to pass through the monthly pivot point again, and in fact it mostly has erased the rally that we've got on Friday. So you can see this was Friday fast reaction, and market 4 sessions in a row, so since the beginning of the week it stands in downward action, mostly has erased this rally. So if market will take it out to these lows, this will mean significant breakout down, and maybe this will be the final point in our head and shoulders journey. So if you remember, in weekly research we discussed the question what this rally is. So this is it some really upward action, upward reversal, but or maybe this is just short-term reaction on the Yellen speech. So it's taking a profit. This market has priced in the chance on rate hike in March, since speculators had turned to taking the profit on this event. Market has shown this bounce up. As profit has been fixed, market has returned right back down to the fundamental action, and that suggests that probably the Fed policy will be more hawkish in the current year, and that will press on euro currency in perspective. Also, as we have said previously, the overall political turmoil in Europe also doesn't support the euro. So that's why this action could become the starting point of something really more significant. I mean, stronger downward drop that we could get on the euro currency. It's obviously that the major driving factor will be non-farm payrolls released tomorrow. So markets expect 190,000 should be released, and of course, investors will take a look at the inflation on the wages. So what the pace on the inflation will stand with the changing of the wages, growing of the wages. So this will be very important information. So on the intraday charts here, we probably should forget about the possible butterfly that we have discussed here, because this action down doesn't correspond to normal behavior of the butterfly, especially after significant thrust up, and especially as market mostly at least made an attempt on Friday to break this line, show the breakout. So you can see what has happened. Market in fact has formed some kind of the washing rings here, grabbing the stops above this area, test the weekly pivot point, test to resistance, and drop lower. Now it stands in downward action. In fact, it seems that market still stands in this downward channel, downward consolidation. We said that we could accept retracement right back down to, so this is not the weekly, this is monthly pivot point. So we could accept the retracement right back down to the weekly pivot point in the bottom of the shoulders. Potentially could become here the head and shoulders pattern. But any downward action, as we have talked in the weekly research, will be signs of weakness, and will be not correspond to bullish behavior. So actually, even small return back here below the trend line will be not quite bullish, because market should not return right back in the consolidation if a breakout already has happened. A deep retracement here. This is even more negative sign for chance of the bulls to reverse situation in their favor. So that's why currently, guys, situation is changing, and it seems that market is weaker than it was seen previously. So on the hourly chart, you could see what's really going on. Any bullish pattern that was forming here, recall what we said, wage pattern is forming, probably should be broken already, because here was nice support area. The market also has broken through the 100% ABCD target. Yes, reaction has followed here. Some minor bounce has happened. Tested weekly pivot support 1. Also, market has completed 1.7 extension. Now it has dropped to the 161.8 and even lower. Market significantly stands below the bottom of the potential left shoulder here, and overall action doesn't look really bullish. Although price action is rather choppy, but this could be the result of some nervousness with investors before the important data will be released. That's why let's keep watching what will happen here. But currently, guys, I think that this overall situation, yes, market probably still has some chance to start an upward action here. But by my opinion, it seems that it would be better, since we just have one session till the non-farm payrolls release. It would be better just to wait what will happen. Because if information will be negative for euro currency, euro will start to drop, and the final destination of this drop and will be rather extended. That's why we will get a lot of chance for taking the short position on the way down. That's what about the bearish scenario. For the bulls, chances right now stands not in favor of the bulls. If we combine all the factors that we see from fundamental point of view, on the table stand possible rate hike in March and positive non-farm payrolls release, because this non-farm payrolls will have relation not only to the nearest rate hike, it will make them some additional information for overall situation in the United States economy, and so will impact on the other possible rate hiking in the future. So this will be also important. From technical point of view, you also see that overall behavior is not quite bullish, so market shows too deep drop for bullish reversal for a bullish action. That's why, guys, currently I think that it's better to not take any long positions here, because market has failed to show real upward action from the area where it could do this, and it seems that some real pressure stands here from the dollar strength. So also we see approximately the same action on the gold market. That's our conclusion. For the bears, it's better to wait for the important breakout to the downside. For the bulls, currently, guys, it's better. That's just my 2 cents. You, of course, could make your own decision. So I think that's not really a good time right now for taking the long position, because in the beginning of the week, it's was a lot of time till the non-farm payrolls release, and market could show some bounces, retracements. So it could breathe for some time, and that could let you to take the position and see what will happen. But right now, it stands right at the eve of the important data. That's why it's better, I think, not take the longs right before the non-farm payrolls.